Going to be going over what's happening in the local real estate market, so let's get right to it. This is the heat map that I show at the beginning of every month, and it is squarely red. I mean, it's below 3 months supply pretty much in every area, so positive if you're a seller. The inventory in Seattle is now at 1.4 months supply versus 1.6 months supply last year. As far as month-to-date closed sales, well, they're up 21%, and year-to-date we are up 23% from last year. Our median closed sale price is up 11% from last year, so squarely double-digit range of appreciation in Seattle. As far as the east side, well, the inventory on the east side now is at 1.8 months supply versus 2.1 months supply last year. And month-to-date closed sales, well, we're up 17%, and year-to-date we're up 19% from last year. So a lot of good activity out there in the sale. Our median closed sale price on the east side significantly, I think, is up. Well, it's up 16%, so about 5% more than Seattle, which is real positive, at least for sellers. So a lot of people getting more equity in their homes. In June, I predicted that interest rates would rise to between 4.5% and 4.9%. A lot of people said, oh, no way, with the quantitative easing and all that, with the government buying these mortgage-backed securities, it's going to remain low. Well, now it's at 4.87% on a 30-year fixed rate, which is a significant increase over the last several weeks. I also predicted that inventory would steadily begin to increase, and by year end we'd be at more than 2 months supply. Well, now on the east side we're at 1.8 months supply, and I think as we move forward here over the next several months, we'll see that slowly begin to inch up, especially as affordability goes down. So prices will be rising at a slower pace, even though inventory remains low, I believe, mainly because of these increasing interest rates. They're going to affect the rate of appreciation in our area. But so a word of caution, we are now heading into a more balanced real estate market. So that's something that's significant both if you're a buyer and a seller. And why? Well, affordability. It gets back to what can people afford on a monthly basis, and that gap is closing pretty quickly. I did this analysis a few months ago where I went by year since 2000. I multiplied the average interest rate times the average list price of a home and came up with what the payment was during that particular year. And some interesting information I came up with. Well, in 2008, of course, we knew the market was super hot and the affordability index was really high. I mean, basically, it was the most expensive time to buy a home in Seattle. Interest rates were at almost 6%, and we were at $661,000 as far as an average list price, which gave us a payment of $32.91. Well, and fast forward to 2012, which was the bottom of our market in December, that average list price was $502,000. At the interest rates being 3.95%, that same home would have cost you about half, so $1,653 per month. And then our historical average down at the bottom is $2,349. So historical average payment in our area for the last 13 years is $2,349 per month. That's a pretty significant number, I think. Today, our payment is at $2,503, so a little bit above our historical average, but I think more significantly in January 2013, that payment was $1,702 per month. So with the combination of the increase in interest rates along with the combination of the increase in pricing, well, our payment has gone up pretty significantly. So, well, when should we really be concerned, that the market is getting overblown like it was in 2008? Well, prices would need to be at $700,000 and interest rates would need to be at about 5.5%, making our average payment $3,208 per month. And as you can see, we're nowhere near that. So I think we have a little ways to go still in this market as far as steady appreciation, but it won't be at the rate that it has been over the last year. So why is this information important? Well, if you're a seller, I think you need to pay serious attention to, one, pricing your home correctly. A lot of people say, oh, well, the market's really hot, let's price it more aggressively. But what we're seeing is that homes that do that, or people that do that, the homes are sitting, and ultimately they're taking lower prices for their homes and getting less net return. So that's critical. Marketing it in the most professional manner possible. When you look on these internet or these real estate internet sites, you'll see all sorts of pictures, and some are good and some are bad. As you can see, effectively marketing your home both from a photography standpoint and of the breadth of sites that you can be on is really, really critical. So that is something that we pay a large amount of attention to. And then meticulously preparing your home for market before you put it on the market. Doing things like pressure washing, window washing, gutter cleaning, staging, all of those things. Basically become a project manager to get the home ready for market. And that's really the three critical things that I'm seeing. If you're a buyer buying in this new market, well, you don't want to overpay. You want to know the market that you're buying in, and it's particularly the location and price range, because I'm throwing out these general statistics, but real estate really is location and price specific. So it's going to be different buying it, say, in Fall City or in Issaquah versus Magnolia or Snohomish. So we want to know that as much as possible. And then negotiating the best possible deal. Obviously, you need somebody that can take that data and convert it into a good negotiation strategy, and then minimizing the liabilities as much as possible. So even though there may be a competitive situation, you want to fully understand if there's water in the crawl space, a roof that needs to be replaced, or other major liabilities that could be a problem down the road, or if the market were to change in another 3 or 4 years, that you would at least know what you were dealing with at the time. So anyway, that's what's going on in the market. Now for my sales pitch, obviously these critical factors, if you're a buyer or seller, require a bunch of experience. I have 13 years experience, over 400 transactions. I'm a full-time realtor, and I make real estate fun. So if you are interested, or if you have a need for buying or selling, please give me a call, and I'm happy to answer questions that you may have about the local market. And that's it for the short report. Have a great week and have a great month, and we'll see you next month.